research and development. Okay, what is R&D and why do it? Okay, obviously you know R&D is the new name for homework. We were sitting in a hotel room and we just started feeling, with Ray and Steve, and there was a negative connotation to homework. So we came up with research and development. Actually, it was Luther's idea, Luther and Kirk, but they're like, we don't like homework. So we were like, all right, let's call it something a little bit more innovative. So we came with R&D. So we do R&D when we want to learn what works and what does not work for us. That's why I highlighted us in red. Okay? Only you can do your own homework. Okay? That's why you cannot cheat. It's not like you're in grade school where you start copying somebody's homework. You cannot do that. Just because Isubi or just because a Ricky or, a bunch of other people can trade successfully because they've done their homework doesn't mean that you listen to them and you can trade successfully tomorrow. It does not work that way. All right? You have to roll up your sleeve and you have to put in the time to do the stuff. Okay? R&D will give you the confidence you need to pull the trigger on the hard right edge. It is very hard. I mean, it is easy, but it is hard. When you see the stuff enough, like Zen, and how he pulls the trade when there's just a little pin bar. Even I can't get that. But, he knows. He said, I've seen it enough. I know this is going to work. And he takes the trade. All right? That's with the confidence he got from doing the flashcards, from staring at the chart for hours, neglecting the kids. I'm kidding. He doesn't neglect the kids. But I'm just saying. The most successful students have a ton of homework. All right. Abo did homework for 6 months. He did not even trade. He just looked at his charts and marked up the charts like a madman for 6 months. And once he figured out exactly what he was looking for, he only traded that. If something else presented and if it wasn't what he thought to be his signature trade, it was a pass. All right, he would take 2, 3 trades a week, sitting there 8 hours a day looking at charts. Question is, can you do it? Doesn't matter who else can do it. You should always ask yourself the question, have you put in the time enough to do it? Okay? R&D includes going over your trades you have taken to discover what worked and what did not. All right? Homework is also going over your trades every single day, once a week, with a friend, whoever. You say, you know what? Like Dave McCoy, he sends me his accountability. That's one of the things we do in the DMR after you finish your session and you have a signature trade and a secondary trade. We have something called the accountability factor. So every week, you're supposed to put together all your trades you took and you send it to one of us, whoever is responsible for you based on your last name. We review it and we say, oh, it's good. Oh, you took this trade, but I don't see anything. Why did you take this trade? Some people have sent me stuff that most of them were wrong. I'm like, all right, cool. Hold back. You need to do this. And the next week I get an email saying, man, I hit 6 out of 7. That's awesome. All right. It could be one little thing that you're missing. Okay. You then R&D what did not work to see how you either avoid it. That's one of the big things to do. Don't do it. Or learn something else to make it work. Okay? All right. So what would be considered R&D? What would be considered homework? First, you got to know your platform. It's kind of funny. Steve said all these things, and it's all part of the presentation I have. You need to know how to add indicators, scripts, and templates. You need to know how to work the toolbar. You need to know how to use scripts and customize them to your settings using Meta Editor. You need to know how to mark up your charts, which is what we're going to talk about, the focus of today. You need to know how to save the markups. All right, and you need to know how to make your flashcards and have the setups ingrained in your head. I've been telling people in the DMR, I have my flashcards sitting on my table. Most of them know exactly what I look for because I've shown it to them like a million times. I said, this is what I look for. If it presents, I take. If it doesn't, I don't make it up. Okay? And it's kind of funny, Steve showed you guys how to do the flashcards, which is great because I talked about it, but I kind of, didn't go beyond that. Okay, so let's talk about know your toolbar. You gotta know your toolbar. Okay, so I'm going to give you 3 tools you're going to use. Everybody knows the toolbar right there with that blue pointer. Right click anywhere on the toolbar to see a list of choices. Okay, this is what you're going to get. You're going to click customize, and then you're going to select the one that says rectangle, and you're going to click insert, and it's going to show up from the left side of the screen, and it'll go to the one that says selected on the right side of the screen. All right, so now that you've selected whatever tools you want, which is right there, that box, okay, you click this and you draw a box anywhere. Why? Because you're going to set up the box, you customize the box to the way you want it. Okay? If you don't see those little dots at the end, which is those yellow arrow on the right side of the screen, of your screen, it says double click to make sure you see these dots. If you don't see them, double click to make sure you see them. Okay, so when you right click on that dot, you're going to see a drop down, which is on the right hand side. Okay, you're going to select rectangle properties, and then you can click to change the color. Actually, this box is going to appear. Once you select rectangle property, this rectangle box will appear, and there's a tab that says common. You can change color, and you also can change how thick you want to see the box. Also, make sure you uncheck, it says draw objects as background, so it won't color it in, okay? Uncheck that. All right, so this is what you got, this box, okay? With the dots on, you can move the box anywhere on the charts. And then you double click those dots to freeze it. Okay. Next is the trend line. So you click and you drop that trend line onto the chart, and you're going to customize it. Same thing. You double click if these dots do not show up. All right. Once you right click on that dot, you're going to get the drop down on the right side, which is that white thing you see in the middle of the screen. And you click on, you select trend line properties. This box is going to pop up. Now you select the colors you like. I like mine white. You can select yours yellow. You can select whatever color you want. And I pick the third one because it's a little thicker. I'm getting blind staring at the screens. All this radiation coming off the screen, messing my eyes up. So I like it a little bit thicker. And I select OK. Oh, and also I click on the second tab that says parameters. And I uncheck Ray. And that's what I get. Okay. You will get that. You can move it. Make sure you have the dots if you want to move the line. And you double click on those little dots to freeze the line wherever you want to put it. Okay. And you're going to use that text. There's one that says A and one that says T. Just use the one that says A. Don't use the one that says T. Okay. Marking up your charts. So let's start with how do you mark up the charts, and then towards the end we'll just take a blank chart and we'll just mark it up together. All right, so I'll explain it and then I'll show it. Okay? All right. Like Steve was talking about, the most important thing is to find the anchor. Okay? The anchor or peak formation, high or low, is where the market makers start their move after trapping volume. You will find the anchor usually in level 3. Level 1 is where there's a reset, and as a matter of fact, we covered that in the DMR last week on levels and reset. It is still in the DMR section videos. I haven't taken any of that stuff down. If you guys haven't seen it or didn't get a chance to see it, please do. Okay? This could be after 2 to 3 days of rise or fall, but up to 5 days. Remember, Steve says sometimes 2 to 3 days, sometimes 5 days, depending. Okay? Level 3, or the third day of the movement cycle, is usually very choppy. Okay, you're going to see back and forth movements in there. Steve is going to talk about why and things like that, but you're going to see it kind of choppy. Identify a multi-day, multi-session M or W pattern, 3 hits to the high or low, extended peak formation, and draw a box around the anchor. Okay? So here's our anchor or peak. Find your anchor, and you draw a box around it. Like that. So then you label it. 3 hits to the high. Remember that little A we use? You're going to click that, you're going to drop it onto the chart, and you're going to label it. You draw a box around the peak. Okay? Why? That way you know where your consolidation is. That kind of level is kind of moving within the same zone. All right, so what do? I write out the number of days. Remember, 3 to 5 days. I need to write out the number of days I'm expecting to see the market maker cycle. Okay, so I write down the days. And remember, level 3 becomes level 1. So the first move, you see day 1 drop on the left-hand side, day 1 drop, that is level 1 drop. So the consolidation in level 3, second leg of that pattern, that 3 hits to the high, the third, I guess the third leg, begins your level 1 drop. Okay, it drops, it goes into consolidation, it drops again. So you got to know where your drops begin and where your drop ends. All right. So over here, you see, I know how to do this too. You see this area? This is level 3, right? We can see that. Here's your M pattern. So here's its outside structure. It pulls away and it consolidates, right? These are the things you're going to be asking yourself when you're doing your R&D. What am I supposed to see? You just don't come into the chart like here's an M, here's a W. You can be like, all right, so Steve's taught me a structure. I'm supposed to see certain things. If it presents, I take. If it doesn't, I pass. It comes out of the box, remember? You can see it. Let me erase it first. I'll show it to you. Here. Here's one. It comes and it forms the high right here, right? Bam, right here. That's where price hit, pulls away. Then it hits it again. That's the second swipe at the high. It pulls it away. The number changed to that number. And then it comes up one more time. The number changed 3 times, remember? Comes out of the box. Number changed 3 times. I'm watching this stuff as it goes on. All right? Now, can you enter here? You could. But remember, there's only 24 pips. You probably only get about 30 pips here, 35 pips, and then it pulls back. All right. So what you're going to do is you're going to mark the movement of price. You say, okay, this is level 3, it becomes level 1. Now I got it. Second leg. Let's say if this is just an M without this structure here, this is your second leg. From here down is level 1 drop, level 1 consolidation, level 2 drop, and also coincides with day 2 drop. Okay? So some people don't like levels. You can call it your drop or rise. And this is consolidation. Okay? All right. Next slide. So you notice 3 days of drops, you're expecting a reversal. I'm lending my money out, I'm lending my money out, I'm getting my money back. So those are the things you're watching for. So far, I haven't taken any trade. I'm just watching day 1, day 2, day 3. All right, I'm watching the consolidation. I'm seeing what price is doing, what I'm expecting to see. I know Steve taught us something, M, A1, A2, right? And this is day 3 drop. It starts from the high all the way to the bottom. All right, so for some people that cannot see consolidations, they're all confused, count your drops. Drop, okay, I'm good. Drop, okay, I'm good. All right, 3 days of drop, expect a reversal. You know how to draw the trend lines. You know how to use this. Just drop the A in there and just type whatever you want under text. So now, once you you put in your days and you put in your pushes. Now you can see, okay, hey, I see my drop. I see all my drops. Then you draw your box around the consolidation area. That's how I personally like to see it. So I see day 1 drop, consolidation. Day 2 drop, consolidation. Day 3 drop. So you draw your boxes around the consolidation and you write out the levels. If you don't like the word levels, you can put day 2 drop, day 3 drop, whatever you want to put, but we use the word level because that's what Steve uses. Okay? So that way we're all on the same page. All right, so this is the market maker cycle played out over 3 days. All right, so first we talk about the cycle, and then of course we're going to talk about the patterns and how to save it and all that good stuff. Okay, so as you can see, 3 hits to the high. We have the days. We have our levels. We have everything marked out. Okay, we're good so far, right? And then level 1, level 2, level 3, and then we're expecting a reversal, which it did. Then after we mark the market maker cycle, we mark the patterns within the cycle as well as the entries. So I'm watching the blue tracer. I'm like, okay, cool, I see it. Price came up to the blue tracer. It did 2 pins to the high. It drew railroad tracks. Obviously, I don't know this is all going to happen, right? If I'm on the hard right edge right here, I don't know this stuff is happening. I'm going to take my first position in here. Price challenged the high, but failed to take it out. I'm in. That's my railroad track. Okay, for me personally, I like to have my second leg as a nameable pattern. I have to be able to name my second leg. If it's not, it's just a bunch of little candles like this, and I can see it like this kind of stuff. Forget it, it's all garbage. Okay? Alright, so I took this trade. I'm down something, 30 odd pip, 35 pips. Price came back against me. I moved my stop to break even. I got taken out break even. Then I see a star pattern, a shooting star. I go in again. All right. And then price drops and gives me my 50 pips, right? So understanding the pattern, understanding what they are, marking your entries and act like, okay, this is my hard right edge. If this is my hard right edge, what am I looking at? If this is my hard right edge, what am I looking at? Or what am I expecting to see? Okay? Okay. So you mark your patterns, you mark your entries, and same thing. Level 1 or drop 1 from the peak. Okay, so that's my level 1, drop 1. What am I expecting to see? I'm expecting to see a stop and high drop, right? So that's why I have these zigzag lines. It kind of lets me know. I come into the terminal, I'm looking at the charts, and I'm saying, what am I expecting to see? Stop and high drop, stop and low rise. That way I kind of have a bias, and that's where I know what trade I am looking for. So I'm expecting stop and high drop. Here's my high, and watch price hit the stops, induce long, trap. It closes below the 50 EMA I'm in. Okay? And my flashcard is going to be right up to this point right there. So that way, in the future, when I look at that and I see this, I know exactly what I'm looking for and where to find it. These little abbreviations like RR is railroad tracks, SS is shooting star. Sometimes you see me write evening star will be ES. COW, cow, is a cord of wood. And morning star will be MS. Okay, just abbreviation, because by the time you write morning star or shooting star out here, this thing is going to be from here to infinity. Okay, so I know this is what the market makers are going to do. Why? They have to induce short first. Always false move. Both sides. That's why if you're a breakout trader, you went short, they took your stop out. They went long, you went long, they took your stop out, they went short. So I don't fall for this. I am waiting for this move to come up, hit the stop, close below the 50, nameable pattern. I'm in. And that's where your flashcard should be right up till there. Okay? Okay, so entry 1, expect stop and high drop. I know for a fact if it doesn't do it, let's say it does this, it does a reset. I don't know it's going to do a reset. It came in and did a reset. Well, there is a way to look at the reset, but we can figure the reset out before it actually happens. And price starts going this way. By the time I wake up, let's say I woke up here and I missed the move. I missed this whole move because it wasn't clear. Pass. You don't have to take every trade like Steve says. That's what the homework does for you. It allows you to see the stuff and like, you know what, all these little tiny candles. It's all garbage. There's no pattern. I'm not going to make it up. Okay? Alright, so after level 1, you're going to identify the patterns and you're going to mark your entries. Easy, right there. Boom. Notice I'm always trading in line with the market maker trend. That's the better trade. If you took this long, you only got like 15, 20 pips. Why? Because there's only 17 pips here. And then it rolled over. Right? Same thing here. Oh, there's a railroad track. That's a W. No, like Steve says, it's inside the Asian range. Notice they gotta induce above the Asian high. They gotta induce. See, that's beautiful. Railroad tracks. Bam, drops. Nice close below the 50 EMA. I'm waiting for that move. I'm waiting. So level 2, I'm expecting also a stop and high drop. I'm just waiting for them to induce long because I know their game. The game is they'll induce first. Remember, they'll have to hit the stop before they move. That's the stop one right there. Railroad tracks. Okay? And then level 3 or the new peak or anchor formation. It drops. Notice level 3, candles are standing on top of each other. Moving averages are all expanded. Level 3, expect reversal after 3 days of drop, but up to 5 days. You identify the pattern and you mark the entries that is clear. So at the start of London, let's say this shadow box right here is down here. and price knocked down, came down this way, and to a beautiful hammer right there. Your entry is right there. All right. Price is up here. That's not what you're expecting to see. There is no trade. You don't make it up. You're like, oh, I'm going to go long here. It has to hit here. How do you know? You don't. They could come down first, hit the stop low in US session, and then rise. All right. The homework or the research and development is going to allow you to see this stuff. Okay. There are some people I know, they're only level 3 traders. Second leg multi-session trades, and they will hold it for the next 2-3 days. They take like 6 trades a month, but they get 200 pips on each trade they take. Okay? The swing traders. Okay, and this is what your chart should look like when you draw the full market maker cycle. 3 hits to the high, there's the big M first, and then there's a little M inside. You mark your entries. You're expecting stop and high drop. You're expecting A1. It does the shooting star, closes below the 50 you take. It drops, pulls back into consolidation. It kind of forms an M pattern out here. Okay, it comes above the Asian high. Induce, it forces the short. It comes back, get those guys who were right by throwing a spike right above it. Closes right below the 50 you take. Okay, nameable pattern. This garbage right here, it's not a nameable pattern. There's all a bunch of candles going up and down. There's nothing there. You wait, and then you say, railroad tracks, I see it. We talk about that stuff in the DMR in detail on what is the nameable pattern, how big those railroad tracks are supposed to be. I know some people take it when they're 10 pips, and then it doesn't work. Then they're like, well, what happened? That railroad track. Okay? Because when they shift the zone with a bigger candle, they want to get away in a hurry. When they do it in a smaller candle, they are not. They can always come back, okay, with a smaller candle. This is a small candle railroad track. That's the big candle railroad track with the 20 pip candles. Okay, beautiful drop. They set the outside structure. I'm waiting for price to come down and challenge the low. It doesn't. It does this. I miss it. I go to sleep. Pass. I don't take a trade. Well, at least on this pair. Okay. All right. Next. Okay. Here's another example. This was the pound dollar. It does a reset. This is not clear, right? You see its first leg is here. It comes back towards a bunch of candles. I don't see it. I mean, I see it now, hindsight, but I don't see it when I come to trade right here. I see price hanging out above here. Okay. I'm not sure. When you're not sure, you pass on the trade. When are you going to be sure? Right here. If you do enough homework, you're going to see it. You're going to be like, okay, cool. I draw my box. That's my level 3 consolidation. Anything inside here is fair game when the market is being chopped. Once it comes out of this area and it pulls back, I'm going to see how much my pullback is. I'm trading the intra, the session, the pushes, right? I'm watching that stuff. It does the trap, it comes back in and closes, I'm in. And look at that beautiful move as compared to this garbage here, right? Sometimes you have to pick your battles to fight. If you're me and I'm sleeping, I missed the move. It's okay. I grabbed it the next day right here. It's perfect. Comes right out of the box. For those people who are struggling, wait for price to come out of the box. Will it do it all the time? Nope. But when it does, it's going to be perfect like this. You grab it right here. You grab it right here. You take it. It's perfect. Okay? This is going to help a lot of people. Just wait. Like Steve says, he laid out the structure for us, 25 to 50 pips above or below the box. You got to induce. You got to come back, hit the stops in the middle of the box. Notice Steve says, where do people break out traders put their stop? Middle of the box, where do you think they go to? Middle of the box, right here. My line is all crooked, but by the way. There's railroad tracks, nameable pattern, take. Alright. I'm expecting level 1, stop and high drop. Next day, I'm expecting stop and high drop. Into level 3. They did the structure in here. When I woke up, I'm seeing price up here. I'm wanting price down here. It didn't do it. Pass. No trade. Alright? Like, Zen would probably get in here. I can't see that stuff. Unless it comes and traps inside the Asian high. Then my entry would be here. Alright? So, they're inducing and trapping. So when you start doing your homework, you're going to start seeing traps. You're going to start seeing, oh my God, they induced and trapped up here. Now I know I can take the trade over there. You make your flashcard with your, and everything past this candle, everything past this candle is garbage. You cut it off right there, bam. You don't see any of that stuff to the right of it. Okay? And one more cycle example, same thing. This is pound yen. It did the M pattern in Asia. Yen moves in Asia. And look at what they did in London. Nothing. I'm in level 3. I'm expecting stop and high drop. I like mine to come up anywhere from 3 to 5 pips off the high. It never did. It's too far away. I pass. It's okay. I grabbed it the next day. I'm expecting stop and high drop. It did a trap move right here. You see that little white tracer? It induced a trap. I'm in. Right off the high. The next day I did it the same thing. Okay. It came right above the high here. In. It did it. Obviously I went to sleep after that, but this would be the second entry. Right? It's okay to miss the level 3 if you can't see it, if it doesn't present properly. But you got to know what you're looking for. And the homework will allow you to see it. Notice, day 1, day 2, everything Steve said. Day 3, 3 level a drop. Each level corresponding, each day corresponding to a sort of almost like a level. And notice level 3. They opened Monday with a gap down, forming the second leg. That's my first leg. That's my second leg. And then price, again, did this garbage. Not what I wanted. Pass. Disappointing, but sometimes they come right down and they throw this beautiful railroad tracks here, and then you're like, oh my God. Right? But that's what you're waiting for. If it's up here and you're expecting it down here, there's no trade. Don't be like, oh, I'm going to go short right here because it's a railroad track. No, you're expecting a W pattern. You're in level 3. If that's not what you homeworked, then that's not your trade. In the DMR, we're going to be talking about signature trades and stuff like that. Really cool. Checklist. We'll talk about that stuff in there. Okay? All right. So what if you do not like the cycle? You say, you know what? The cycle is a little too complicated for me. Let me start marking up the patterns first. Okay, and that's cool. You can start off with the patterns. You got to start off with something that excites you about the business. If it's patterns, if it's the pushes, if it's the drops and rise of price, if it's 1, 2, 3, you're going crazy. I know some people go crazy or 1, 2, 3. I got to make sure that Steve is right about the 1, 2, 3, and they start marking those things up. So if you don't like the cycle, you go with the patterns. But you still have to know the cycle because that will create a bias for you, which direction you're going to go. Alright, so the patterns are simple. This is the patterns I personally like. Can you trade this long? Yeah, it's called a 50-50 bounce and stuff like that. There are different ways to take these things. Are you going to do it? I don't know. Maybe, maybe not. It's all up to you. How do you see it? I see these things. Maybe you don't. Alright. I can see the moving averages cross like that. I see these bounce. I'm going to go in. Notice, hit the stop, but not really. Comes back. It's a perfect M. Second leg is railroad tracks. Nameable pattern. Second leg is a nameable pattern. Take the trade. This is how you create a flashcard. It's going to be right here. Everything past this is nothing there. And your flashcard should be like this, right up here. Classic. Perfect. Okay, that's your M pattern. Oops, let me go up there, clear that out. And here's your W pattern. Okay, price comes, notice. 1, 2, 3 to the low, 3 swipes. Pulls back, induces long. Comes back, throws railroad tracks. You take, that's your flashcard. Notice the divergence. TDI. Okay, you mark up your TDI as well. So on this pattern, my TDI is already showing divergence from way back here, right? All the way back here. I can start drawing my trend line. If I'm looking for short, the trend line goes on the top and on the top. If I'm going long, I'm going to go from the bottom, okay? So I noticed, look, hit the stop, pull away, then they did a trap move. I call these trap moves. They go up closes right above the high, induce longs, the market makers, and then they trap them by coming right back inside. If you say, you know what, this is too big, you put in a foot soldier, and then you wait for 50% retrace, and you put the rest of your position in there. Divergence, and you can even mark the pattern on the TDI. That's what I used to do a lot before. That's why I know the TDI very well. I don't use it anymore, but most of you guys should. It gives you confirmation. Isn't that the same railroad track we just saw in the previous candle? If you don't look at this, just look at this. See how they did it? Same thing. They closed above, induced long. This at one point was green, remember? And they closed it red. Previous day's traces right here. They induce, they trap. They kill 2 birds with 1 stone. The breakout traders above the previous day's high. And the market makers hit the stops, widen the spread right here. To take out everybody above you. Pull it back, and you go. Notice shock fin. You're going to draw that stuff down. Right, it gives you additional confirmation. Alright, so once you have all this stuff marked in your charts, how do you save it? Okay, saving images. So you right click on your chart and you click Save as Picture. I select Active Workspace because it's nothing like too fancy and you don't need all that other stuff down there. Just Active Workspace, you select that and you click OK. Alright, and then you name it. I named it M pattern, you can name it, and I usually put it on my desktop so I can find it pretty quickly. I create little folders and then I put these patterns in there. And then you click Save. Okay. And so before we talk about flashcards, let's quickly go and take a look at some charts here and quickly mark it up. Here is my chart. We're starting from here. How do I know this is my high? Well, previously, we already know if you leave your stuff marked. This is my 3 hits to the low. W pattern, 3 hits to the low, right? Level 1 straight away. This is level 2 after it takes up this high. Price was just kind of choppy. And then this is 3rd. Okay, so we know this is level 3. So what do? I take this. I just left this up there. I take my little box, the rectangle, click on it, and then I'm going to draw. I just click on where I want to start, and then just move it to the right. Okay, like that. And then I click on the A, which is the text, and I click wherever I think I want it to be at. I click over there. This little box will show up, text box, under text. I type in level 3. Okay, I'm going to change it to whatever color I want. I like mine at white. And then I like my labels to be 18. Okay. You see, I can move it. If I move it, the whole screen moves. I have to click it, and you see the little white dot up here, and then now I can move this. Okay, I can move this. And if I want to freeze it, I click it or double click it, and that little white dot disappears, and it freezes. Now I can't move this anymore. Okay. Okay, I'm going to blow it up so you can actually see it better. Now you can see the pattern, right? 2 pins to the high, comes down, comes back above, and then there's a star pattern right here. If you want, you can just draw the same thing, and that's my M, right? I can click on text, write an M over here. See, I click the little dot appears, move it up, click it again. Now it's stationary, not going to move. And here is if this is my second leg, that is a shooting star, right? With a little pin bar going above. And I get my trend line, and I draw it. And I put enter. Okay. Put mine at 14. Okay, I'm a little anal, so I got to make sure that my lines are all straight and not crooked. Okay, that looks nice. It's a nameable pattern. You can go in and put in SS or whatever you want to put in. Right now, I come off. I know this is push one and drop one. I'm going to draw another box right here. You see how I just take all this from this low to this high, and then everything inside is the same zone. Okay, now if I want to make a duplicate, so if I click this, if I want to create something close, I click the control button and I left click on the mouse and I drag it, and it creates the duplicate of whatever was there before. Alright, so I need to change this. I'm going to right click on this where you see this dot, text properties, and I can change it to level 1. So I don't have to click there. I could have clicked there and then put it in there. Same thing. Okay. And here's my star pattern. Shooting star. So I just type in here shooting star. Click on my trend line. Here's my entry. See, I click over here, I click my control button, left click, I create a duplicate, and so on and so forth. Okay, on the top, if you want, you can put in day one of drop. I'm looking for 3 days, right? 3-day cycle. Sometimes it's a little bit tough to see. I gotta pull this down, and there you go. Day 1, I make a duplicate copy. This is my day 2, right click, text properties, change it. Okay. And then I see a nice drop. There's nothing in between to take a reversal. There was no beautiful W, nothing, just straight drop. Same thing here, just straight drop. And then it goes into consolidation, right? I'm in level 1 anyway. I do not want to counter. I do not want to trade back towards the peak. Okay, so there is no do not counter in level 1. So I'm not looking for longs right here. I'm only looking for shorts. Okay, if I wake up and price is already up here, and if it doesn't do anything up here to form a multi-day or multi-session M, then I pass. All right, and then I'm in day 2 or level 2, and here's my next box. You know. Now, as you can see, this is what I like to do. I left click, bring this one in here as a duplicate, right click on that and change it to 2. Some of you guys can see this, some of you may not see this. This is an M. Why is this a good M? I'm looking for it. I'm in day 3. I'm looking for 3 days of drop. So if I'm in day 3, I'm only looking for shorts. I'm not looking for longs. When you're a little bit more advanced, then you can trade both ways, a little bit more easier. You can be like, oh yeah, look, I'm going to go long. And then guess what happens? It rolls over, right? So trade in line with the trend. Here you have, yeah, this thing never cooperates with me. Eclipse. I like mine to be like lime. Like that. Alright, you can see the cross. When you notice the 5200 cross, you're usually level 2. And by the time that crosses, you should be, by that time, at level 3. Okay, sure enough, this was level 3. It did hit level 3 here. Kind of ugly, not clean. Alright, and then I just move, create a duplicate, and move that to level 3. Down here. So now I can clearly see, this is my M, right? It closed, induced short, it came back up through railroad tracks. I mark my railroad tracks. Draw my trend line, beautiful close below the 50 MA. Okay. And that's it. And if you want to, call this railroad tracks, you could do that too. RR. I make these a little bit smaller, not the same size as that. Like that. So, very quickly you can see how you can mark these. Okay? And I have marked tons and tons of them. As you can see, this is my other chart. Okay? I have marked them all over the place. Some of them you can see. Notice most of them are above, when it comes above the box and they trap. Or when I'm looking why. Because if my peak formation is down here, which is where we were just now, and there was no trade here, I'm still looking for longs. Until it does something different. Until I see an M. Then I'm looking for shorts. Okay? So over here I'm looking for longs. I would take the straight long. Once I start seeing, I'm like, wait a minute, something is wrong. Now my moving average across to the downside. I'm looking for shorts now. This could be a reset. And then sure enough, once this closes below, pulls back, stop is too big. Like 25 pips, I don't like it. I wait for the pullback. If it gets me in. If it doesn't, I pass. So as you can see, they're all marked. If I don't like something, I put chop. It's okay. It's perfect M, comes out of the box. Railroad tracks, I'm waiting. Then it does. Classic induced trap. Beautiful. This was the one we were looking at earlier, the TDI. Right? So, this is how you should be doing your homework. Okay? Okay, so flashcard. Once you have the Mona Lisa of the M and W pattern, you need to make a flashcard out of it. Steve showed you how to do that. You need to have the flashcard handy when you trade so that you can cross-reference it when you think you see your pattern. Remember how Steve held it up with a picture of him and he's looking at his printout and he's comparing it to the screen. That's what you can do. Okay, it's slight variation to the theme, but it should be close. Write a checklist of what makes the setup good while doing your homework or R&D. That's what R&D is for. Okay, why would you take that M pattern? Okay, I took that M pattern because, I see the price come here, it rejects. I see a star pattern, second leg nameable pattern. I took that trade, it was great. Or you say, you know what, I see that coming up, and then I see railroad tracks closing above the first leg, and that's the pattern I'm looking for, and I'm going to enter right there. Right above the first leg. That kind of stuff. All right. Checklist. of what makes your setup good. Okay? The R&D and the flashcard should make you confident in your setups and know that you're going to be 80% plus accurate. My setups are 85% accurate. Why? I've gone back and I've done it. I don't need to take trades every single day. I don't need to be sitting there and taking, I got to take 5 trades a day. No, I don't. 1 to 2, sometimes 3. Last week was great. Thursday, Friday, I got 4 trades each one of those 2 days. All right. No, sorry, Wednesday, Thursday. When it presents nice, you go. When they don't, you sit back and you wait. This is from Gary. He posted it in the forum. This is the evolution of a trader. All right. If you look like this, no offense to anybody, you're trading too much. You're working too hard. Okay. You're not supposed to take every single trade. If you don't do your homework, that's what you're going to look like. You're going to be sweating every time you take a trade. This is where we are. All right. Confident. Standing tall. Done your homework. Know what you're looking for. Know where to find it. That's what the homework does for you. All right. And this is Steve's favorite saying. If you never see it in hindsight, you will never see it in foresight. All right. This method works. You just have to put in the time to see it for yourself. When you start believing it's going to work, it's going to work. If you start believing it's not going to work, it's not going to work. All right. Okay. So I am done with this. Let me look at some questions. Okay. All right. Wow, this thing is flying through here. Thank you. All right. If the first leg railroad track is higher than the first railroad track bar is higher than the first leg, you mean the second leg. If it comes back in, that's the trap move, Mark. You can still take that trade. Okay? Only if it comes back within 3 candles. What do I mean? Okay, what do I mean by that? Homework it. You'll see what I mean by that. Okay, like this. It induces all the breakout traders. I can see them. They're trapped. They come to almost to the middle of the box, widen the spread, whole 9, right? They get those guys. They come back to the high. They induce long. They trap. It has to trap. If it doesn't trap and it starts hanging out over here, it's no good. You don't take the trade. You don't be like, oh, I think it's going to come back. You don't think. You react. They move. You move. They present. You take. You don't sit there and be like, oh, okay, staying up here. I think it's going to come back. All right, like Steve said, it's not your job to think. Let them do what they got to do. You just have to know when they do this, this is what I'm going to do. It's like a golf player. Not that I play golf, but they swing. When they get, when they actually get onto the golf course, you don't think for like, okay, how am I going to hold this? How am I going to hold my clubs and what I'm going to use? No, it should be second nature. When you're in a tournament, you think Tiger's sitting there and be like, okay, so let's see what I'm going to do. No, he already knows. Okay, I'm going to do this. I'm going to do this. If the wind is this and all that, I don't know. They pick the blades of grass and throw it into the air and they see which direction the wind is blowing and all that stuff. But that's it. They've done their homework. All right? They've done their homework. They know. Okay. John, thank you. All right. So let's see. Can indicators, strips, and templates put on Sierra charts? I have no idea what Sierra charts are. I only look at MT4 charts and GTS Pro with FX Solutions. That's going back to we with the other life. Okay, to duplicate text on a chart, do you hit the control key and the left click? Yes, Joel. You hit the control key. You make sure the little. You see, I click on it first. Whoops. Not cooperating now. See, you click on it, you see this little dot. Okay, then you click Control and you left click on your mouse and you create a duplicate like that, and you just pull it away. Okay, that's how you create duplicates. Do you use scripts to trade with, and could you have little help with could we have a little help with the scripts? Yeah, we could probably do something with the scripts. Let me talk to Steve about that. We probably could do a little bit of a platform intro for those people that are new. I think it'd be very helpful. Yes, you do need to use scripts. They're fantastic. Just customize them. Okay, using this meta editor, you customize it to the way you want, and you just drag and drop. George, thank you. Robert, thank you. Okay, good. Abe, Gary, hey, how are you? All right. Let me see. Do you only extend your box drawing to the open close of a candle, or do you include the wicks as well as? Okay, good question. Personally, I like to draw where the candle closed. I kind of like leave the wicks behind, but I'm very well aware of where the low is. Okay, so just because I draw my box, you see how I draw my box? I kind of like body to body. That's just the way I like to draw it. All right. I like to look at this too. You see how it induces and traps? I've seen this so many times. I'm in right there, right off that high. Because all I see is, like Steve says, they hit the stop one more time. They induce and they trap. We call these traps in the DMR right here. They're very, very powerful. All right. Finish the trap. I'm in. And by the time I'm down here, I'm up 50, 55 pips. I already hit my take profit before it does the big stop on both sides. Okay. So, Carl, the triangle you use to draw a solid line isn't from the MT4 platform, is it? No, it is right here. The trend line. This is it. It's a solid line. You can double click on it and you can move it around. Alright? It's right here. It's called the trend line. I use the trend line. I use A and I use the box. And obviously for the DMR, I kind of use the ellipse to show the moving average crossovers and stuff. So I'll use this here. Like that. Alright. In other terms, hammer and Morningstar are essentially the same thing. Yeah, it's kind of sort of the same thing. See, like this, I call it a shooting star because the pin is to the downside. If the pin was to the inside, it's the Morningstar. So it depends on where the pin is. So if this was reversed and it was like this, see, if it comes up, it shows the pin above, and let's say this candle is over here, then that's a shooting star. All right, but if the pin was facing down, then it would be an evening star. All right, there are examples. See, it did the same thing here. Induce, trap, you go. Not a lot of pips, but you didn't lose, right? The name of the game is not to lose money. What defines the beginning and end of a box? Very good question. So the way I'd like to draw my box, for example, right here, is price consolidation. I kind of took this, think of it this way. This is 1, 2, 3, right? That's an M. It's a 1, 2, 3 pattern. 1, 2, 3. So wherever 2 is where my box usually, the low of my box is, and where 1 is usually where the high of my box is. Alright, same thing here. Then it drops to where my low is and where my high is. At one point, before this, the box was right here. When it comes here, my box goes right here. If it goes a little bit high here, as long as it doesn't take out 3, I'm still in 1. Sometimes 1 goes as close to 3 without taking it out. Okay, so everything between this low and this high is an oscillation within the same range. All right. Okay, let's see. Oh, that's not what you meant when you were using a little red triangle to draw the lines in your PowerPoint. Oh, that is that's kind of interesting stuff. You see this? You talk about this thing, right? If I right-click here on my PowerPoint and it says pointer option, I can pick pen, arrow, highlighter. So I figured out how to do this by hitting Control and any of these things. So if I want to change from this to a pen, I click Control P. I'm sorry, Control P the pen and Control A the arrow. You see? So I can switch it back and forth without having to right click and do all that stuff. Okay. Okay, what about the length of the box? The length of the box really doesn't matter because, let's see. The length of the box doesn't really matter as long as price stays within this oscillation. Once price breaks through it, my box ends. So in other words, I can move this box right to here. I just put it there, but actually price breaks here. I don't need my box to be all the way out here. Okay, and then it drops. Same thing here, you see? I kind of went all the way to the edge where it broke, and then after that, my box ends right there. I'm actually not using Bamboo. Maybe I am, I don't know, but I'm kind of using the PowerPoint drawing tool. Why do you leave your wicks out of your box ring? I don't know. I just guess it's because it's cleaner this way. But see, I mean, I kind of did it all the way to the top and to the pin because I can see, oh, that's the stop hunt. I don't know, probably psychological. And let's go with the last question here. Car, can you say something about how you can tell if candles with pins are stop hunt moves or pick up pending order moves? Okay. All right. So, yep, good question. I'm right here. I get up. I'm right at this edge right here. Okay. So maybe it's easier if I go to the PowerPoint and scroll back and see if they have which one of the charts here. Okay, we've been looking at that chart for a long time. Let's look at this one. So how do I know whether they're stop hunts or whether they are trap moves? That's the question, right? So stop hunts are usually pin bars. You see them, they'll throw pins like this. Okay, they'll throw a pin, but they won't close above the moving averages. So this is not a clean one, but normally you will see them. They will throw pins to the high, but they won't close above it. Again, it's not a good example. This one probably the better example here. You see? So price comes above, it closes above the high, inducing long, right? And then it comes back in with a trap. This, you see, at some point, you see these pin bars to the high without actually closing above it. When they throw these pins or the stop hunts, they'll grab the money, they'll pull it right back in. They'll grab the money, they'll pull it right back in. When they induce and trap is when they go and close and they come back in and come back the other direction. Once they trap, they start moving. You see within one or two candles, you see a shift bar. So because this was a trap move by closing above and coming back in, they shift, they move away very quickly. But when they're throwing pin bars all over the place like this, it's a stop hunt. They don't really move that much. They move, come back, they move, they come back. They're just going back and forth, throwing pin bars all over the place. All right, so that's just something I've noticed. A stop hunt isn't a trap move. No, there's a difference between a stop hunt and a trap move. The best example actually would be Let me see if I can find the best example. It'd be like usually at the high of the day or low of the day, you see them. Or high of the week, low of the week, when they come to the blue tracer. Like this. You see how they come, they pull back. They come, they pull back. These are nice. It's a nice move. Okay? They're very, very clean. Alright, if you're in level 2, you may not take this trade because you're like, oh boy, I'm looking for longs, I'm not looking for shorts, you'll pass. Just find something that's like, there are tons of them. Like these. You see how it's at the outside structure, there's through a bid bar, and then they start coming to the high, and that's the trap. They induce long, and then they come right back inside the range. That's the trap move. Alright, these are stop hunts. You see, these are goes to previous day's low. Some amount of people put the stops below yesterday's low or below the 200 EMA. They'll induce by closing below the 200. They'll go short. People do that, and they hit the stops with pin bar, but they don't close and do the trap. You see the difference? That's the stop hunt. Kind of, sort of, because it went kind of below this was the inducement and trap on the 200, but it was a stop hunt to below low. And this is the trap move. It goes above and comes right back in. Alright, so hopefully that made sense. Greg, you want to trade both in the right context, because sometimes they don't always do traps, but traps are better moves, yes? Okay, so when building an array of charts, is there a shortcut to building each time period and each pair individually? Max, yes, there is. As a matter of fact, Jim talks about that on Monday when we talk about the flashcards. He actually shows you how to do it by using an EA in the DMR. And you don't actually have to sit there and do the stuff. It automatically does it for you. It's kind of neat. Awesome stuff. Okay, I think we're pretty much done. All right, guys. Hopefully that helped, especially for the people that are new and also for the people that haven't done the homework yet for whatever reason. You gotta do it. You gotta do it. You're doing yourself a favor by doing it, and you're doing yourself a disservice by not doing it. All right? Don't get mad at other people that have done it and they can see it. Just think about what you got to do to succeed. Okay? It's like sitting outside and looking at somebody else have a great job, and we're like, well, I wish I got that job. Well, you can. You just have to go get it. So do what you gotta do. All right? This is a great job. This is a great business to have. You just have to invest the time. It's like a restaurant. You got to invest the time to become, to get a good restaurant, to get a good business going. All right?